In this video, I'm going to tell you why I'm buying Starbucks stock and why you should consider it too. Now you're probably thinking everyone is doing a video on GameStop or crypto or NFTs, and Ravi, you're doing a video on Starbucks? Well, by the end of this video, you'll see why I'm doing a video on Starbucks and why I think it's a stock that you should have in your portfolio. We'll talk about some of Starbucks' strengths and opportunities, and then we'll get into some of the risks and potential downsides of owning the stock. You can't talk about one without the other. Over the course of the pandemic, Starbucks has proven to be quite resilient, especially when you compare it to the broader restaurant and food sector. When the pandemic hit, Starbucks quickly pivoted and introduced new and convenient pickup strategies, and these pickup strategies were evident as I walked through downtown Seattle. While almost every restaurant and bar shut down or was completely empty, I still regularly saw a line outside of Starbucks of people waiting to pick up their mobile orders. And this wasn't just happening in the cities. This was also true of Starbucks in the suburban areas, and I've witnessed both firsthand. There are a few Starbucks along my normal driving routes that are outside of the city, and almost every time I drive by them, the drive-through lines are like 15 to 20 cars long. Literally, there's one Starbucks that we normally drive by, and the drive-through line causes a mini traffic jam on the main road that it's on. The line of cars wraps around the Starbucks, and the cars bleed into the street. And this makes sense because only 40% of Starbucks stores are offering limited seating, so to make up for this, Starbucks has intentionally aimed to increase the use of their drive-thrus. They've also expanded their digital reach by enabling curbside pickup and expanding their delivery capabilities. And it's been working because on their Q1 earnings call, they mentioned that drive-thrus delivered over half of their net sales, which was an increase from pre-pandemic levels. Over the course of the pandemic, Starbucks also saw a rise in mobile order transactions. In fact, 25% of US transactions were mobile orders, up from 19% before the pandemic. Now, the great thing about mobile orders, if you're Starbucks, is that people tend to spend more money. In fact, on their Q1 earnings call, they said customers spend 17% more on the app when compared to ordering at the counter. This is because the Starbucks app makes it really easy to customize your drinks and to add a food item to your order. So maybe if you were ordering in person, you might decline that extra shot of espresso, or you might turn down those delicious food items. But with the app, it makes it really easy to add that extra pump of vanilla or to add that double chocolate brownie that you've been eyeing for a long time. Customization has been a huge part of Starbucks' success. I know a few people that have some really complicated drink orders. I mean, at most restaurants or coffee shops, you'd almost feel bad ordering something super customized. I mean, no one wants to be that person, right? But at Starbucks, it almost feels encouraged. They want you to order your drink the way that you like it. And if it isn't 100% what you expected, they will gladly make you another one with no attitude on the side. Okay, so we know that more people have become rewards members, and we know that more people are using mobile ordering and drive-thrus. But another strength that Starbucks has is the opportunity for growth in its second biggest market, China. In China, Starbucks delivered an impressive 5% comparable store sales growth in Q1, and also during the quarter, Starbucks opened 160 new stores and now officially have over 4,800 stores across China. And in terms of Starbucks' loyalty program, reward members in China grew 51% year over year. And as China's middle class grows and disposable incomes rise, I only see Starbucks' presence and revenue in the region continuing to grow. As many of you know, the US market is pretty saturated with Starbucks, especially in Seattle. Now, that's not to say that there aren't pockets of growth around the country, but even those growth prospects are dwarfed by the growth opportunities that China presents. And let's not forget about the reopening of the world economy and the $1,400 stimulus checks that will be hitting Americans' bank accounts in the next week or so. Both of these events will play beautifully to Starbucks' strengths. With the reopening of the world economy, the amount of people traveling is expected to boom. So we can expect more traffic at airports, at train stations, at malls, and at tourist attractions, which are all places where Starbucks strategically places its stores. When you couple that with the fact that people are going to have some extra cash laying around, either in the form of the stimulus or from not spending much money during the lockdown, you can bet that Starbucks is going to benefit. As promised, we can't talk about a stock without talking about its risks, particularly competitive risks both domestically and overseas in China. Chains like Dunkin' and McDonald's and Tim Hortons and other coffee-serving fast food locations present threats to Starbucks' growth. Now, these chains are particularly more appealing to the Starbucks customer who isn't a rewards member because the non-rewards member is more likely to be less brand loyal. The main risk from competitors is in the form of price competition because the fast food chains simply sell their coffee and premium coffee products at a much lower price. Now, many people on Wall Street think that this is a big threat, but I just don't buy into that narrative. The reason I don't buy into that narrative is because my experience buying coffee at a fast food restaurant and my experience buying coffee at a Starbucks is completely different. When I go to a Starbucks, I know that I'm going to get consistency. I know that I can, customize my order to my taste, and I know that I'm going to leave with something I enjoy. On the contrary, the only time I've gotten coffee at a fast food restaurant is on road trips when it's just more convenient. I've never thought to myself, oh, I want a coffee. Let me go to McDonald's or let me go to Burger King. No, it just doesn't happen for me, and I think many of you are probably in the same boat. Now, many people think that Starbucks' stock is expensive, but I personally think that it isn't, and I think it has a lot of room to grow. And I'm not the only one that thinks Starbucks is a great buy. Out of the 33 analysts currently covering Starbucks stock, none of them have an underweight or sell rating on the company. Now, 16 have a buy rating, 2 have an overweight rating, and 15 have a hold rating. And the most recent upgrade actually came this morning from BTIG, and they set a price target of $130. In summary, I think there is a lot of pent-up demand as the entire restaurant sector reopens. And with the increased savings amounts across U.S. households and those handsome stimulus checks about to hit bank accounts at any time, I think Starbucks is well positioned for some solid growth over the course of this year and beyond. Starbucks has and will continue to be an aspirational brand, and I don't think any of its competitors can say that. As much as people like to talk about the threat of competition, I honestly think that Starbucks operates in a space of its own. I mean, I come to think of it, and I can't even think of too many people that hate Starbucks the way they do other fast food chains. I mean, the only time I hated Starbucks was when Howard Schultz sold the Sonics. When he did that, my friends and I vowed that we would boycott Starbucks for life. Well, I'm here to report that the boycott maybe lasted 3 weeks. And the more I think about it, the boycott didn't last because there really wasn't a competitive offering. Starbucks is a place where people not only go to get a cup of coffee, they also go there for their work meetings, they go there to study, or they go there just to hang out. And there isn't another chain coffee shop that offers those types of experiences, let alone a fast food restaurant. I mean, when's the last time you saw someone studying at McDonald's? Starbucks has a unique offering and they have a very loyal customer base, and their brand loyalty has only grown during the pandemic with their successful efforts to become more digitized. When you combine this brand loyalty with the overseas growth potential and the fact that Starbucks really doesn't have competition, Starbucks feels like a no-brainer buy for me. On their Q1 earnings call, Starbucks projected strong earnings per share growth rates through 2024. When you couple this with the fact that their dividend has consistently increased since 2011, I think it's even more reason to own the company. Well, that wraps up my video for today. As always, I want to thank you all for watching this video, and I hope you learned something new today. I'll see you all next time.
I be making big moves, big moves. I be making big moves, big moves. I be making big moves, big moves. And I don't really like to lose. Nah. I be making big moves, big moves. I be making big moves, big moves. I be making big moves, big moves. And I don't really like